The 2025 dinar shift, how U.S. banks quietly changed the game for currency holders. Not long ago, the idea of walking into your neighborhood bank with Iraqi dinar and exchanging it for U.S. dollars on the spot would have sounded like wishful thinking. For years, dinar holders faced endless challenges, uncertain exchange channels, niche dealers, and weeks of waiting for confirmation or payment. Yet as 2025 unfolds, that picture has changed dramatically. Across the United States, a quiet but powerful transformation is taking place. Major financial institutions are beginning to accept Iraqi dinar directly for cash exchange, integrating the process into everyday banking operations. Customers are reporting faster transactions, simpler verification, and unprecedented convenience. What was once a niche, complicated process is now becoming a mainstream banking service. This isn't a rumor or hypothetical scenario. It's a growing reality. More and more individuals are walking into local branches, handing over their dinar, and leaving minutes later with dollars in hand. In an industry known for caution and gradual change, this rapid shift has drawn attention from both investors and economic observers. From obstacle to opportunity. For years, exchanging Iraqi dinar in the U.S. was a cumbersome ordeal. Holders often had to rely on specialized currency dealers, many of whom operated exclusively online. Transactions required mailing in banknotes, waiting for verification, and accepting less than favorable rates due to processing fees and risk margins. The process could take days, sometimes weeks, and left many people uneasy about security and authenticity. Today, that narrative is being rewritten. In 2025, an increasing number of mainstream banks have quietly introduced systems to process dinar exchanges in-house. These banks have updated their currency management software, trained frontline staff to recognize and verify authentic Iraqi banknotes, and streamlined their foreign exchange procedures to handle dinar alongside more common currencies like euros or pounds. The result is striking. A process that used to be stressful and uncertain now takes only minutes. Customers can walk in, present their identification, and complete their exchange without appointments or special arrangements. Real-world stories illustrate the shift. Reports are pouring in from dinar holders nationwide, describing first-hand experiences with this new level of convenience. In Texas, for example, one longtime holder named Sarah recently shared her experience. After holding 500,000 dinar for nearly a decade, she decided to test the waters. Expecting to be told she'd need to schedule a future appointment or mail her currency off for a valuation, she was surprised when the teller immediately began processing her exchange. Within 30 minutes, Sarah left the bank with cash in hand, a process she described as smoother than exchanging euros after a vacation. Meanwhile, Michael in Florida decided to see how widespread the new policy really was. He visited 3 different banks. 2 were able to process his dinar immediately. The third required additional verification, but completed the exchange later that same day. Each branch handled the process efficiently and professionally, suggesting a coordinated effort across institutions. Stories like these are multiplying across states, from California and Ohio to Georgia and New York. The pattern is clear. U.S. banks are increasingly equipped to recognize, authenticate, and exchange Iraqi dinar without delay. What's driving this sudden readiness? Such a significant operational change doesn't happen by accident. Banks rarely invest in training, new software, or compliance infrastructure unless there's a strong strategic reason. So what's behind this sudden willingness to handle dinar transactions at the retail level? Experts believe several factors are at play. First, Iraq's improving economic outlook cannot be ignored. After years of reconstruction and fiscal instability, Iraq's economy is gaining traction. Increased oil production, expanding foreign investment, and renewed international engagement are creating conditions for a more stable currency environment. Second, banks often act in anticipation of change. Financial institutions closely monitor global trends and currency movements. If major banks are allocating resources toward dinar exchange readiness, it suggests they foresee increased demand or a potential shift in value. Finally, technological modernization has made it easier than ever for banks to authenticate and process less common currencies. Advanced scanning systems, digital verification tools, and real-time exchange rate integration now allow tellers to handle foreign notes with minimal risk or delay. Combined, these factors are transforming what was once a logistical headache into a simple banking service. A look back, historical parallels and lessons. To understand the potential implications of this shift, it helps to examine similar moments in economic history when national currencies experienced dramatic recovery after periods of turmoil. Consider Kuwait after the 1991 Gulf War. When Iraqi forces invaded, Kuwait's national currency, the Kuwaiti dinar, plummeted in value. For months, people relied on alternative currencies, and the dinar seemed all but finished. Yet when the conflict ended and oil exports resumed, the currency rebounded sharply. Those who had held onto their dinar through the crisis saw its value soar, by some estimates, more than 3,000% from its lowest point. Germany's post-World War II recovery provides another powerful example. After years of devastation and inflation, the introduction of the Deutschmark in 1948 marked a turning point. Economic reforms and industrial rebuilding quickly turned Germany into one of the world's most stable economies. Holders of the new currency benefited immensely as confidence and purchasing power returned. Likewise, Vietnam in the late 20th century offers a slower but steady story of transformation. Following decades of economic struggle, the Vietnamese government introduced market reforms in the 1980s and 1990s. Over time, the Vietnamese dong strengthened modestly as trade, manufacturing, and foreign investment grew. These historical cases share a common thread. Currencies tied to nations undergoing recovery and modernization often appreciate as stability returns. Many observers see parallels between these examples and Iraq's current trajectory, a country rich in natural resources, particularly oil, and gradually improving its governance and economic systems. Why U.S. banks might be preparing now. Large financial institutions are rarely reactive. They plan years ahead, investing in systems and staff training long before public announcements or visible market shifts. If banks across multiple states are now equipped to exchange Iraqi dinar over the counter, it could signal strategic positioning for potential future developments. The implications are twofold. On one hand, banks may simply be responding to customer demand. Over the past 2 decades, thousands of Americans have purchased Iraqi dinar as a speculative investment, anticipating a future appreciation. As awareness grows, banks might be expanding services to capture that customer base and earn exchange rate commissions. On the other hand, banks could be preparing for broader currency normalization. The possibility that the Iraqi dinar could become more widely traded or internationally recognized. By establishing procedures early, they ensure they're ready for increased transaction volume if Iraq's currency gains traction globally. Either scenario demonstrates a high level of institutional interest and investment in being ready for whatever comes next. Efficiency, security, and accessibility. Another important dimension of this change is the improved security and efficiency now built into the process. Historically, dinar exchanges were risky because verification relied heavily on visual inspection. Counterfeit notes and inconsistent quality control caused many banks to reject transactions altogether. Modern technology has changed that. Banks now use automated currency scanners capable of detecting watermarks, holograms, and serial number patterns unique to each denomination of Iraqi dinar. Combined with centralized databases, These systems dramatically reduce the risk of counterfeit acceptance. Furthermore, exchange rate data is now integrated directly into banking software. This allows tellers to quote up-to-date conversion rates instantly and execute transactions at fair, market-based prices. The result is a streamlined, transparent experience for customers, a far cry from the uncertainty that once defined dinar transactions. A sign of broader confidence. The banking sector's embrace of walk-in dinar exchanges may reflect a deeper trend, growing institutional confidence in Iraq's economic future. In recent years, Iraq has made progress on several fronts. Efforts to modernize its banking sector, attract foreign investment, and stabilize government operations have begun to bear fruit. Oil exports remain strong, and the country continues to develop infrastructure essential for long-term growth. While Iraq still faces significant political and security challenges, its fundamentals are improving. As financial analysts often note, markets move not on current conditions but on expectations. If major banks believe that Iraq's currency will play a more significant role in global finance, their early readiness makes sense. The practical side, how it works. For those wondering what the new process actually looks like, the mechanics are straightforward. A customer brings their Iraqi dinar to a participating bank branch, along with valid identification such as a driver's license or passport. The teller verifies the authenticity of the notes using the bank's scanning system and checks current exchange rates. The customer can choose to receive cash or deposit the equivalent amount directly into their account. Processing times vary slightly by bank, but in many cases, the transaction is completed within minutes. Funds deposited electronically often appear in accounts the same day or within 24 hours. However, policies still differ from one bank to another. Some impose daily or per transaction limits, while others require additional verification for large amounts. It's wise for customers to call ahead or check online to confirm a branch's exact procedures. What this means for dinar holders. For those who have held dinar for years, sometimes decades, the implications are profound. The ability to exchange at a trusted local bank represents not just convenience but also validation. For the first time, mainstream financial institutions are treating the dinar as a manageable, serviceable currency rather than an exotic exception. This development also provides greater liquidity. Holders no longer need to depend solely on online dealers or wait for potential future revaluation events. They can now access cash more easily, adjusting their holdings as circumstances change. Still, experts caution against overenthusiasm. While bank readiness is encouraging, it does not automatically signal a massive revaluation or overnight gains. Currency markets remain unpredictable and are influenced by complex global dynamics, including oil prices, regional stability, and monetary policy. Prudent investors approach this new landscape with both optimism and realism. Caution amid optimism. Speculation about the Iraqi dinar's potential future value has circulated for years. Enthusiasts point to Iraq's oil wealth and reconstruction potential as reasons for possible appreciation, while skeptics warn that such expectations can lead to unrealistic hopes. The truth likely lies somewhere in between. While Iraq's improving fundamentals support the possibility of gradual strengthening, there is no guarantee of dramatic revaluation. Currency adjustments depend on a country's overall economic performance, fiscal discipline, inflation control, and international demand for its exports. Banks offering walk-in exchanges may simply be preparing for increased customer activity, not necessarily predicting a surge in value. For investors, that distinction is crucial. As with any speculative asset, experts advise diversification, research, and moderation. Only funds that one can afford to lose should be allocated to speculative currencies. Why timing and preparation matter. History shows that major financial shifts often reward those who are prepared. When Germany, Kuwait, or Vietnam entered periods of reform and growth, early participants benefited not because they gambled recklessly, but because they stayed informed and acted strategically. The same principle applies here. For dinar holders, the ability to walk into a bank and exchange currency instantly offers flexibility that didn't exist before. It allows them to respond quickly to market movements or policy announcements without logistical delays. If Iraq continues to stabilize and attract investment, demand for its currency may grow naturally, not through speculation, but through legitimate trade and financial activity. Having accessible exchange channels in place is therefore a logical step for banks and customers alike. The broader financial picture. This shift in bank policy also reflects a broader trend in global finance, the democratization of foreign exchange services. In the past, exchanging non-major currencies required institutional relationships or specialized brokers. Now, digital systems allow even small banks to process dozens of currencies efficiently. For customers, this means expanded access to global markets. For banks, it means new revenue streams. The inclusion of the Iraqi dinar in such systems demonstrates both technical capability and market openness. Whether or not the dinar experiences dramatic gains, its integration into U.S. banking infrastructure represents progress toward normalization. Looking ahead, what comes next? What does this development suggest about the future? If history and current trends are any guide, we may see continued expansion of dinar exchange capabilities throughout 2025 and beyond. As more banks join the movement, competition could drive better rates and smoother processes. At the same time, Iraq's government continues to pursue economic reforms, digital banking initiatives, and stronger regulatory frameworks, all of which could enhance confidence in its currency. Should these efforts succeed, the dinar could gradually gain value and stability, creating a virtuous cycle that benefits both Iraq's citizens and foreign holders. Still, patience remains key. Major currency recoveries, from Germany's Deutschmark to Vietnam's Dong, unfolded over years, not months. The dinar's story will likely follow a similar path of steady progress rather than overnight transformation. Final thoughts, readiness and realism. As of 2025, one fact is clear. Exchanging Iraqi dinar in the United States has never been easier. What was once a speculative, cumbersome process has evolved into a legitimate banking service available in more locations every month. This newfound accessibility empowers dinar holders with flexibility and peace of mind. It also signals that major financial institutions see enough merit or potential in Iraq's economic future to justify operational investment. Yet amid the excitement, caution remains vital. Exchange rates fluctuate daily, and long-term currency value depends on complex political and economic forces. For those holding dinar, the smartest approach is to stay informed, stay grounded, and stay ready. Monitor Iraq's economic news, understand your bank's policies, and make decisions based on verified information rather than hype. The door that was once closed to dinar holders has now opened. What happens next will depend on global developments and on how wisely investors respond. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.